Hey, Aaron Adams here with Infinity Investing. I wanted to spend a couple minutes today talking to you about timing the market. Investors say, should I buy an investment property now? I mean, obviously, 10 years ago was a better time to buy an investment property. Am I missing out? Did I miss out? Is there going to be any opportunity going forward? And I wanted to just spend a few minutes addressing that subject because I think it's one of the things that new investors or people who've kind of only maybe been in the stock market don't really understand, because instinctively people know that property values historically go up and down. But one of the things that doesn't go up and down is rents. For the most part, rents just steadily climb. With the exception of like a Detroit where you lose 60% of your population over a 4-year period. For the most part, rents continue to climb over time. I was reading an article a few years ago that talked about the price of 400 loaves of bread. So it said if you go back 500 years, 1 month's rent was equal to about 400 loaves of bread. Take that forward to today, a loaf of bread's a couple bucks. 1 month's rent average across the U.S. is about $900 to $1,000. There's your number. And the point of that comment was highlighting the fact that you can go back hundreds of years and monthly rent tracks with inflation. When you have monetary devaluation, rents go up. When you have economic depression, more people rent. And so when you're thinking about an investment property, it's not whether or not property values rise and fall. What you really want to think about is rental income, because rental income is the thing that you're buying. You're not actually buying a house. You're buying $800 a month, $1,000 a month, $1,500 a month. And so, a lot of people are concerned right now because they're saying, well, the government's just printing money, so the dollar is going to drop. Well, if the dollar drops, then rents will go up again. So instead of $1,000 a month average rent across the U.S., you could be looking at $2,000 a month rent. And the reason that's so important is because even if you buy a property now that's significantly more than what you would have paid for it 10 years ago, rents have kept pace with property appreciation. And so we use a rule where we talk about the 1% rule. And if you can get 1 month's rent to be 1% of your purchase price, so if you get $1,000 a month for a $100,000 property, then typically across the U.S. you're going to make about 8% on your money, assuming you buy the property all cash. And so if you can achieve that relationship right now, it doesn't really matter what you're paying. So if you pay $400,000 for a property like an investment property like an Airbnb, and you're able to make $4,000 a month from it, then 10 years from now, that property could be worth $500, $800, $2 million, but your income potential is going to go up as well. So the important thing for an investor is to get in the game. They always say the best time to plant a tree was 25 years ago, and the very next best time to plant a tree is today. And so as an investor, what you want to do is think more in terms of how do I make more money and live off of less so that I have money to invest? And how do I take 20, 30, 40, 50% of my income and start putting it towards passive investing, start putting it towards investments that pay you, like dividend stocks, like rental property, like Airbnbs, and grow your net worth. I remember when I first started thinking of this idea of passive income, I was teaching high school 22 years ago, and I read a book called Rich Dad Poor Dad that just kind of blew my mind because it talked about passive wealth accumulation as opposed to active income. And I had never thought about money that way. And I really started to obsess about how do I get more rentals, because that was passive income. And my focus was kind of misplaced, because what I really should have been thinking about was, how do I make more money and live off of less than what I'm living off of now? Because at that point, when I was teaching high school, my wife and I were living off of 95% of what we made every month. And there were some months where it was really tight. And so to get more money, we were thinking, could we do a side job? Should I bartend on the weekends? Those kinds of thoughts that hourly employees, 5-figure income workers think about. And when I started to think about how do I make more money, and so I started flipping properties. I bought a duplex for $100,000 that I sold for $175,000. 9 months later, I bought a 7-unit apartment complex for $130,000 that I sold for almost $250,000. Once I started making more money, then the only important thing was that I didn't increase my spending every month. My wife and I still lived off of that $4,000 a month we had been living off of before. And we committed to taking that excess and putting it in long-term passive investments. And I just watched that go from making $40,000 a year 22 years ago to across all markets, we did over $100 million in gross revenue last year. And my personal net worth is over $65 million. And so it's just applying that principle, letting it compound, letting it grow, and really focus on how do I make more money and live off of less. And today my wife and I live off of less than 10% of our income, and 90% of our income goes into our investments, into our businesses, into passive growth. And so it's kind of a simple question: is now a good time to get into investing? Yeah, there's the most important time to start is now. And it's about changing your mindset to think like the wealthy do, because there's very common ways that the wealthiest Americans think about their money. And that's what you want to adopt. I always say that when I had a 5-figure income, I also had a 5-figure mindset. And until I learned 6-figure income principles, I didn't graduate with my mindset. And that also held to be true until I learned to make $1 million in a year and repeat that every year. I didn't have a 7-figure mindset. And so I want you to start thinking like a 7-figure and an 8-figure investor thinks, and really focus on how do you make more money, how do you get in the game immediately, and how do you take control of your finances. And as you apply those principles, you'll be just blown away. Most people overestimate what they can do in a year and underestimate what they can do in 5 years. And I want you to think about that for a second, because maybe you're the type of person that jumps around and there's a new fad, and it's a multi-level marketing company this month, and you're going to buy a franchise, and you're chasing get rich quick. That's not the way you want to think about your money. That's not the way we think about it here at Infinity. And so I would encourage you, if some of what I'm saying today resonates with you, then join us at infinityinvesting.com. Get signed up with our free basic membership. Join us at our next live virtual event that we do every month, our Infinity Investing workshops, and start moving forward on your financial education and your financial journey.